Trump will continue with protectionist policies as impact on US GDP limited, says Ryan Sweet of Moodys Analytics. China does not want to ignite a trade war, but they are going to stick to their guns and are not likely to back down. Ryan Sweet, director of real-time economics, Moodys Analytics, tells ET Now. Edited excerpts. What do you make of the fresh salvo from Trump slapping another 10% tariffs on $200 billion worth of Chinese goods? Do you see the repercussions being felt by equity markets? The Trump administration is moving forward with additional tariffs on China. I do not think this is going to be the end. The Trump administration is ready with another $267 billion in additional tariffs if China decides to retaliate. The key thing to keep in mind is that the Trump administration feels comfortable moving forward with the tariffs because they have a little bit of a cushion to play with. The U.S. economy is going into the third quarter, tracking 4% GDP growth. All in all, they are not seeing the effect on the economy yet, but as this plays out over time and the additional tariffs put up, the economic costs will continue to mount. Do you think the retaliation from the Chinese is going to be rather hard? Because up until now, the Chinese have been maintaining that we do not want a trade war, but if there is one, we will not take it lightly. For the moment, the Chinese have not done anything that would hurt the Americans straight away. The policy's response from China is going to be geared towards non-tariff retaliation than tariff. They can depreciate the yuan, they could use other non-tariff approaches, increasing regulatory burdens on U.S. businesses. These are the options that China has. Among the options everyone has been throwing around is dumping of their large U.S. Treasury holdings. I think that is very unlikely because that would really lead to a trade war. That would be very disruptive for global market conditions, disruptive to the U.S. economy, and it will come back and feed into China's economy as well. All in all, I do not think they are going to go down that road unless this trade spat turns into a trade war. Expect the ECB to strike a more tempered tone than Fed. Ryan Sweet, Moodys Analytics. We are optimistic that Chinese economy will begin to stabilize. Ryan Sweet, Moodys Analytics. Fed rate hike could be in December. Ryan Sweet, senior economist, Moodys Analytics. Actress Kaylee Cuoco splits from husband. Ryan Sweet. Incrementing feature is disabled in your country, region.